Hi, I'm Mark Newton from ML Newton Advisors. I wanted to talk to you today about the three top technical concerns that I have heading into the back part of March. Just as a backdrop, I mean, S&P and most of the world has seen an amazing rally in recent weeks, a lot of resilience. S&P is closing in on 4,000, up about 5% alone just in the last 8 trading days. Semiconductors and the stocks are up almost 10%. We have an amazing amount of optimism. Speculation yet again is starting to ratchet up, and investors seem to have largely forgotten about COVID, and the new fear, of course, these days is inflation, as investors really try to understand what the Fed's vision is that different than what the market anticipates. So initially, my concern is with technology. I'll show you the first chart of just equal weighted tech versus the S&P. As we all know, starting in the middle part of February, we started to see a huge downturn in the sector of technology, which of course makes up 27% of the S&P these days. So it's the largest sector. Technology hasn't recently broken down versus the S&P going back over the last 6 months. So the bottom part of this chart shows just a relative chart of the RYT, which is the equal weighted technology sector versus the S&P. So the fact that this is broken down, in my view, even though we've started to bounce, is a very big negative for the market. We could see further downturns in growth in the months ahead, and my thinking is that's going to be a very big deal for the market. Thus far, it's been largely avoided by the majority of sectors which have come in to pick up the slack, and my thinking is that's not going to last much longer. The second chart is just when looking at utilities versus the S&P, and that's also started to show evidence of turning up very quickly in recent days. So the return of defensive trading, yet again, is something that investors should be aware of. It's often something that happens towards the latter part of these rallies. And my thinking is when you start to see, the REITs and utilities jump up at a time when interest rates largely are still at very high levels after the recent bounce we've seen in rates, and that is really something to pay attention to. The market's turning defensive at a time when technology has turned down. Now that the defensive sectors are starting to come back into the fray. Third chart I wanted to show is a cycle composite that I put together using 4 of my favorite cycles going back over the last 30 years. So this is from the Foundation of the Study of Cycles, and this has been very accurate in pinpointing highs and lows of the market in recent years. This starts to turn lower really over the next 3 to 5 weeks and should actually move lower between now and the month of June. So I think that markets are on the verge of starting to turn down. My thinking is it is right to be a little bit defensive and not get caught up too much in a lot of the the real speculative type fervor that we've seen in recent weeks. So cyclical patterns starting to add weight to the downside, technology turning down, and utilities and defensive stocks starting to turn up. The combination of those makes me a little bit more cautious at this stage of the rally. Thank you very much.